In the report, you all really highlight kind of the first thing is that Bitcoin has retaken that 200 average. Talk a little bit as to why this average is so important, and then what is really driving kind of the retaking of it, and does that mean that maybe the bear market has actually bottomed?
Yeah, we look at the 200-week moving average as an important indicator, just to put in perspective the market activity, how big the drawdown is that we've seen versus past cycles. And if you look, the 200-week moving average, Bitcoin's only touched it 7 times in its history. And it touched it when it broke below 22,000 earlier this month. And historically, that's been a good time to average into Bitcoin. Not a recommendation to buy, sell, or hold anything, but the average returns of Bitcoin 12 months out after reaching the 200-week moving average is over 200%. So historically, it's been a good indicator of capitulation and a bottoming event, though not necessarily predicting or indicating the exact bottom, because we see times where Bitcoin's price drops dramatically, quickly below, and then recovers sometime after. So it's kind of just a global signal that we're close to a bottom, though you need to look at the more specific on-chain indicators to see where that bottom might actually occur. So seeing Bitcoin now reclaim that 200-week moving average, just last week was the second week in a row that it's closed above it, is a sign that we may be getting more bullish, heading above those ultimate lows. I think it's still important to put this drawdown in context to previous drawdowns. So Bitcoin in general for global bottoms has typically bottomed below 80% drawdown from all-time highs. COVID was one exception where the drawdown was very quick and there was the V-shaped recovery in pretty much all assets, where it didn't. This time as well, we didn't get down to those 80% levels. So if there was, say, increasing macro headwinds that drove the whole market down, if equities reach new lows, I don't think crypto will be spared. That ultimate low looks around the 13 to 14K range. So we're not ruling that out as a possibility. But at least crypto specific, things are looking a lot healthier now than they were, say, the past 3 months. And I think, just to put in context what's happened that's driven a lot of this chaos in the market, really starting back in May with the collapse of the Terra and the UST stablecoin. That was a $50 billion event. If you look at the 20 billion market cap of UST and the 30 billion market cap of Luna, that really evaporated overnight, and also had Bitcoin specific selling pressure in there because the Luna Foundation Guard was buying Bitcoin to backstop that peg, which obviously didn't work. But that was a massive selling event. The markets all sold off from it. And then over June and July, we saw the contagion of that event start to show itself in the market. We had a strong feeling there would be some. We didn't know exactly who would be affected. 2 of the main ones turned out to be Celsius and Three Arrows Capital. Celsius, they both had exposure to Terra. Three Arrows taking a big bet on that ecosystem took a big hit to their balance sheet that rendered them unable to weather 2 other trades that they made that also went bad. One of those was the Grayscale Bitcoin Trust. As that discount widened, their trade moved against them. And then also the Lido's liquid staked Ether that they had a large position in as well was also trading at a discount. These 2 products trading below spot essentially put them underwater in a way that rendered them unable to meet their margin calls, which it also turns out they were borrowing for pretty much everybody in crypto. So that we learned kind of throughout the entire month more and more about that story. Three Arrows, at their peak was managing between 10 and $18 billion. So we went from a $50 billion accident in Terra, 10 to 18 in Three Arrows Capital. Celsius as well, which halted withdrawals on their platform, ultimately filed for bankruptcy in the beginning part of this month. They were managing over 20 billion at one point. The tail has been getting longer in terms of who's been halting withdrawals, filing for bankruptcy. But the actual magnitude of those events, if you look at, even another lender, Haldenaut, which I hadn't heard of before, but paused withdrawals this morning. much smaller in magnitude. And it seems like that overall contagion has now been contained to some extent, which has really allowed the market to settle here. People are less worried about the next shoe to drop and more kind of thinking about that overall macro context that I mentioned at the beginning.
Hey, you, did you like this video? Great. Make sure you subscribe, like the video, and see you next time.